Welcome back. I don't know about you guys, but if you're anything like me, what I find absolutely wild is that we will spend thousands on our bodies every single year, whether that's gym memberships, supplements, massages, therapy, skincare, list goes on and on and on. But we never stop to ask, can I actually write any of this off through my business, or do I have to pay it all personally? Answer is a lot of the times, yes, and sometimes absolutely not. The difference, whether it's going to be personal self-care or part of your business or maybe part of your medical plan or your tax structure. So today we're going to unpack that because wellness isn't just a lifestyle choice, it's a strategy and it's something you should be using too. When you pair the right health moves with the right tax setup, you can literally get paid to stay healthy, which is incredible. Welcome back to Spicy Takes and Tax Breaks. I'm your host, Aubrey Dennekamp, business owner, tax strategist, and well known as your write-off queen. Today, we're diving deep into how to write off your health, the right way to legally do it, strategically, and without the IRS thinking you're trying to expense your best smoothies. So, what is the foundation? What really counts? What doesn't count? And why? So, let's start with this. The IRS doesn't hate your gym membership. It just hates when people get sloppy with what qualifies as actually a medical expense when it should be a business benefit. So, rule of thumb here, it's about staying healthy. That is personal, unfortunately. We all want to be healthy, but that is a personal expense. It's about treating, preventing, or managing a condition. It's deductible as long as you're structured correctly. If it's business provided benefit to your entire team or staff, it is absolutely deductible. It should be deducted through your entity and you should be using that strategy. So an example here, let's give you a medical route to start, I guess. Under Section 213 of the IRS, medical expenses can be deducted if they exceed 7.5% of your adjusted gross income. But that's on your personal return, not on your business. So let's say you earn $100,000. 7.5% of that is $7,500. If your out-of-pocket medical costs, which is doctor visits, prescriptions, braces, LASIK, therapy, etc., it's about $10,000 per year. You can deduct the $2,500 that's above the threshold. This includes your health insurance premium at this point if you're not already pre-tax through your work or your business. Out-of-pocket dental, vision, any of that. Therapy, chiropractic, acupuncturists. Some weight loss programs are if they're prescribed by a doctor, so make sure you're going in the right direction if you are that route. But gym memberships, general vitamins, wellness items usually don't count here either unless prescribed for a medical condition and you have a written note from a medical provider. The business route. So here's where it gets fun for me. If you're a business owner like myself, the IRS business owners gives them the chance to turn personal health costs into business deductions when they're structured correctly. So how does that work? Option A would be a health reimbursement arrangement, an HRA, or Section 105 plan. You set a plan up through your entity to reimburse medical expenses for yourself and employees, or if that employee is your spouse, that's completely legitimate as well, if they're employed through you. So the business gets the deduction, you and your family get a tax reimbursement. This is incredible. Another option for this would be through an HSA health savings account. So if you're on a high deductible health plan, you can contribute up to $4,150 or $4,300 in 2025 for self only. So it jumps. In 2024, it was $8,300 or it's going to be $8,550 for family in 25. Plus a $1,000 catch-up if you're $55 and older annually. So you get the deduction when you put the money in. So that way it grows tax-free and it's tax-free when you're using it for medical expenses. That's great. That's a triple tax-free money plan. And one of my favorite health strategies on this planet, to be honest, especially when we get into going Botox or other fun things, which we're way lacking at this moment. So the wellness gray zone, let's get into that. Here's where most people get tripped up. The gray area between, hey, is this health? Is this wellness? Is this business? Let's talk about what you can justify and what you cannot, and what you might if you're structured the correct way. Potential deductions with the right documentation would be like physical therapy, chiropractic work, acupuncturist, if they're medically necessary for a condition. Counseling, therapy related to business performance or stress, yes, mental health counts if it's for your work, for business purposes, business growth, any of that. If you're medically prescribed a fitness program, say you have obesity or you're injured and need rehab, any of those type of things would qualify here too. Massage therapy does also if you are prescribed by a doctor for injury, migraines, crazy stress, high blood pressure, etc. Areas where it would be non-deductible, regular gym membership, unless it's part of a doctor prescribed plan or rehab plan. Over-the-counter vitamins or supplements are typically not deductible through your business. Cosmetic procedures, they can or cannot based on what your business is, but if you're just, run-of-the-mill things and not using it for anything that is promotional facing, which would be like Botox, fillers, elective surgery, things like that, a lot of times not deductible. General wellness retreats, unless it's clearly tied to business education or branding or you're taking your board members, it's not going to be counted here either. So a lot of people ask them, well, what is the retreat rule? I had a client recently, a wellness coach. She hosted a mind body business retreat in Sedona. We structured it so that the event was clearly educational. There was 2 days of connection with the education, and there was a subscription to come to that event. You had to buy a ticket or be one of the members. And it was connected to her brand solely. So all the flights, hotels, meals, workshop expenses, all the goodies that went along with it, all of those were deductible because it was part of her business offering, not just a personal spa weekend, even though she did enjoy all the spa benefits while there. But if they'd gone to the same place, the same trip alone, without any clients or any sense of business purpose, it would be totally personal. It'd be zero deduction, no tax benefit there. The difference wasn't the destination. It was making sure she was intentional when she booked the trip to have also business while she was enjoying the other things she was looking for in the sense of wellness and also reset. So someone asked me recently also what the gym test was. I wasn't 100% sure what they were meaning with this, but after I explained, we got on the same page. And this one does actually come up, not necessarily in that way. But if you own a business and provide gym memberships to your employees as some sort of a wellness perk, it is 100% deductible to the business, even for your gym membership. This is a great one. A lot of people do it. We keep people healthy. They are less sick. They're able to show up for work. They're incentivized. I think it's great. It's great for your mind, work, body. Do it. It's up to you, though, the owner. It's personal if it's only you. Unless you have some sort of formal wellness benefit plan that includes yourself with your employees. So make sure always you're offering this to your employees. A lot of gyms, specifically smaller local gyms, will work with you to have an extended plan without breaking the bank too. So this is great. So for a single owner S Corp, it's not going to be an option if you have no employees. But if you are a single owner S Corp that has now grown to having employees, so no longer single, but still owner S Corp, absolutely. It is structured property and offers equally to all your employees across the board. It is absolutely deductible, no matter how many employees you have. Okay, so let's go into another one. One of my favorites personally, massages, Botox, and the beauty gray area. This is one of my favorite questions of all times because it's one I personally utilize and can relate to. So people ask, can I write off my Botox, my massage therapist, my hair? Well, here's the deal. Sometimes yes, sometimes no. Sometimes absolutely no. For most people, these are personal expenses, in all honesty. The IRS calls them non-deductible personal grooming. But if it's a big part of your business, and this is a big but, if your appearance is central to your business brand or your income, and you can show that and tie it together, it absolutely can be deductible. Whether it's documented correctly or not is going to be the gray area, which we'll drop down into a full episode about this soon. But absolutely can't be. It can also be covered under your HSA. It's deductible when brand or performance is related and tied to revenue being generated for that business. So massage therapy for injury or stress management, as long as it is documented by the prescriber, as well as being recommended by a doctor, absolutely deductible. Hair, makeup, aesthetic services, specifically for photo or video shoots or live events, things like that, absolutely 100% deductible through the business. Botox or fillers, if required for an on-camera appearance or as a promotional, not personal maintenance, but a promotional service, or something you're doing as far as creating content or a video of you getting Botox while you're talking about real estate or promoting whatever you're promoting at that time absolutely can be a business deduction. When it's not deductible, it's going to be routine self-care. So like you just need to feel good or feel distressed. No, not deductible through your business. Cosmetic work without any sort of medical or business purpose that can tie to revenue. No, not deductible. Everyday hair appointments, lashes, skincare, facials, any of that stuff, unless it's for a specific business purpose, it's not also going to be deductible. So an example, a beauty creator. She is a content creator and she books monthly facials and Botox appointments right before her shoot days. She films the process, tags brands, and uses it as part of her marketing strategy now. That makes it absolutely a business expense. It's just not part of her income production, but it's actually how she is putting her name out there, which absolutely ties to her revenue. If you get Botox just because you want to look great or feel younger, that is going to be a personal expense. Absolutely acceptable, but not a tax deduction. IRS rule here is if it serves you personally, it's a cost. It serves your brand, it's a strategy. Keep that in mind as you go through pretty much any of the rules. Let's go through the next one. I have a client, I refer to her internally, she knows this too, but as the real estate queen. She hosts monthly champagne and closing events. She deducts venue, catering, branding materials, content production, because it's all marketing. So the IRS doesn't care that it's fun and she's hosting these parties monthly with her best girls, but it counts as business, and it's networking and marketing. Longevity and tax strategy when you're doing this is everything though. You want to make sure you're layering these so they benefit you as you continue to evolve in your business. It's huge. So here's why the wealthy play the game as a long game versus a right now game. They combine wellness deductions with retirement and health planning to make their money double duty. So it's also saving you money, but you're using it in several different places now too. So think of it like this. You can pair your HSA with your solo 401k. One builds future wealth and the other is covering future health. Both are tax-free though. You can layer this health reimbursement plan on top of your family payroll. The business reimbursement your spouse's health plan while shifting income into that lower tax bracket. Brilliant. You can even stack a C Corp management company to offer benefits for your S Corp that it cannot while still taking the S Corp benefits. This is also brilliant here. It's not about a write-off, it's about how you're pairing them all together when you really look at it. So being able to create those gym perks, the fringe wellness benefits, the health reimbursements, this can be a game changer when you're looking at everyday expenses. So what do? How do we implement this to where you're at now and how you're using it? If you want to start with writing off health strategically, you're wanting to check your entity first and foremost. Sole props and partnerships. You can offer reimburse yourself and under a Section 105 plan that can extend to several different things. S Corps, it's a little bit trickier. You'll just want to make sure that you're paying health premiums through payroll or at the end of the year making a catch-up adjustment, and set up as a C Corp management entity to hold benefits that your S Corp maybe can't provide outside of that. Also making sure you're exclusive and equal to all of your employees as you start getting more crafty with these. So also get your HSA funded. It's the simplest health wealth way to go. And the account that exists, you should use it. You can invest and balance your entire health needs from this. Again, I said you can get pretty cosmetic here too. Botox is often qualifying under your HSA account. So be sure to talk to your strategist about how to pair your wellness program with what your business structure currently is, or we can look at changing what that structure is down the line. So don't just guess. The difference between deductible and personal is often a few sentences in your plan document and operating agreement or how you're electing to be structured. So at the end of the day, writing off your health isn't about loopholes. It's about alignment. When you understand how the system works, your body and your bank accounts start to work together instead of against each other, and it is my favorite. The tax code rewards people who plan, not the ones who are guessing, not the ones who are double backing once they're audited. This wellness therapy, prevention care, fitness, beauty, yes, even the IRS recognizes where this works and where it doesn't. I want you to remember though, there isn't one rule that is changing everything. There are all of these millions and small strategies that you connect together to work for you and where you're at. It's an evolving process and should be looked at quarterly, if not annually. You can layer your health plans with payroll. You can stack wellness benefits with your entity type. You can design your business to support your longevity and wealth at the same time, as well as having one business fund a future project. It's not about working more or spending less. It's really about using the entities that you have set up and the life that you want to live and making that work for you now, as well as getting a bigger grip on what the growth plan actually should be. It's about learning to use the rules, use them well, and live happier, healthier, financially, as well as physically. I think this is huge. I'm Aubrey Dennekamp, your write-off queen, and this was Spicy Takes and Tax Breaks. Until next time, stay strategic, and as always, invest like the wealthy. Live your life and enjoy it. You deserve it.